Hello, everyone. Good afternoon. Give it a few minutes for people to hop on. Let's give it a few minutes. Good afternoon. Welcome, everyone. Looking forward to chatting with everyone today. Awesome. Well, good afternoon. My name is Monica LaCrue. I'm Affordable Lending Manager with Freddie Mac, and I'm joined today with my colleague, Jim Hall, also Affordable Lending Manager with Freddie Mac. And we're going to talk today about the benefits of refinancing. And so you may be wondering, well, I'm not a lender. Why would I need to know about refinancing? And we know that as a trusted advisor, you are the go-to for your clients in all things real estate. So what we want to do is maybe share some information and some tools and resources that you can use to reach out to your past clients to make sure that they're familiar and up to date on the benefits of refinancing. There's a lot of people out there with a lot of equity in their homes right now, and we want to make sure that they're using it wisely. Maybe they want to pull some out and remodel their kitchen. Maybe they want to pull some out and help maybe a child with a down payment on their first home. So we're going to go over the refi market, the opportunities, and also close out with a product that we have here at Freddie Mac that makes financing an option for those who want to consider it. So let's get started. In 2020, the typical refinance loan averaged around $300,000. And the homeowner lowered their average mortgage rate from 4.3 to 3.1. Now, on average, those who refinanced their 30-year fixed rate mortgage lowered their rate and saved over $2,800 in payments. Now, in the first half of 2021, homeowners continued to take advantage of the low mortgage rates and increase their home equity to refinance their properties, reducing the monthly mortgage payments and extracting equity through cash out refinances. Now, in this slide, we see the total single family mortgage refinance originations for the last 20 years. And if we look at the right side, we see a steady and strong increase from 2020 into 2021. Now, savings do differ based on the market that they're in, and we are seeing that higher savings seem to be recognized in high cost markets and vice versa. The amount saved monthly differed significantly in the metro areas. So, for example, borrowers who were in Los Angeles, San Francisco, San Diego, Washington, D.C., saved an average of over $3,500. But borrowers in lower income markets, lower price markets like St. Louis or maybe Pittsburgh sold around $2,000. But on average, the mortgage payment saved for everybody for the first half of 2021 in the US was around $2,817. Now, this slide shows the home price growth. We saw historically low interest rates, and a lot of renters started to experience FOMO, fear of missing out. More wanted to purchase, so the prices went up and continued to go up. And all across the country, homeowners started to build even more equity in their homes. COVID also led to a mass departure from high-cost markets. Once remote work was offered, a lot of buyers continued to move out of the urban markets into more affordable areas. And then they drove up the prices in those affordable markets. We saw a lot of leave urban areas. We see here along the West Coast, a lot of people from California going out to places like Idaho and Utah and Arizona. And we see people on the East Coast like New Jersey and New York, probably most likely moving into areas like North Carolina. In North Carolina, we see a 22% growth, and that's huge. You probably saw some of these people into your market in search for more affordable homes. What are these? What are you doing with your past clients to help them navigate all of this equity that they have? I encourage you to reach out, see if refinancing is an option for them. Maybe they want to take a little bit of equity out, and again, do that remodel of that kitchen. Research also indicates that borrowers with lower incomes refinance less often than borrowers in other income brackets. Freddie Mac Research also indicates that lower percentage of Black and Latinx borrowers refinance compared to their white borrower counterparts. Jim's going to highlight our refi product, Refi Possible, in a few minutes, but I want to highlight how big of an opportunity it is to help serve our multicultural communities. Refi Possible will serve as an impactful tool for families in underserved and multicultural communities who may not be aware of the benefits or refinancing opportunities that are available to them. There's also, they might not qualify for other opportunities or the traditional refinance offerings. Our Freddie Mac research showed that 50% of Black and Latin home borrowers could save around $1,200 annually. So I'm going to pass over to Jim now. He's going to share some information about the benefits as well as our Refi Possible product.
All right, thank you, Monica. It's always great to partner with North Carolina Realtors, so we really appreciate the invitation to be able to, talk to you, the members of such a great association. Freddie Mac has done, wonderful work with North Carolina Realtors in the past, and we're looking forward to building upon those successes and really take the relationship further. So, what are the benefits of a realtor and real estate professional learning about refinances? Well, like Monica had mentioned, you have a past book of business, you have customers, and that those customers either went into a conventional loan or a government insured loan. So this will give you an opportunity to reach out to them again, just to show them that, the type of customer service you provide is above and beyond. And also, hopefully it will, turn into referral business for you also, being a trusted advisor for these clients. So we'll be able to grow your business and also build your community by getting those referrals and being able to, sell homes to your past clients, children, relatives, friends. So, so that's why we're really talking to you about refinances here, to help you, to think a little bit outside of the box, be innovative, and this will give you another avenue to, look for business. Please advance the slide, Monica. So Freddie Mac created the Refi Possible program, and it's pretty, again, innovation is the word I like to use. When they really established this program, it was very, very innovative, especially for us Freddie Mac employees to take a look at it, to really see what the benefits were, for the consumers. So again, that, will help them reduce their expenses by, experiencing a lower interest rate on their existing mortgage. It helps build strong communities. And you might be asking yourself, well, how's it do that? Well, when you reduce someone's monthly payment, that gives them more disposable income. So they'll be able to take that disposable income and spend it at, local retail shops or whatever, and help that local community by helping the economy. And it helps them also build generational wealth. And Monica mentioned earlier that, Freddie Mac is really being very aggressive in, taking a look at white homeownership versus African-American homeownership and Hispanic and Latino homeownership. So we're trying to bridge that gap and help, underserved, lower to moderate income families, really, get on a level playing field. And also by expanding eligibility, we're removing barriers that were up against, borrowers in the past. And as you can see to the right, there's almost 2 million homeowners eligible for this program. And Monica, you can advance the slide. And some of the details around Refi Possible. And this is the first bullet point here is very, very important. These are loans that have to be Freddie Mac owned to be refinanced, okay? So like I said, you know who went conventional. Now, if it went into a Fannie Mae type of loan, Refi Possible, it can't be used for that. But that doesn't mean when you're talking to your customer that they can't be refinanced into other Freddie Mac products, okay? Because we have other refinance products which they can be, used for those customers. Also with your past FHA customers and USDA customers also. The Refi Possible product is a no cash out refinance. So that means you're only really paying off the Freddie Mac mortgage. So if they want cash out to buy that boat or do home improvement or consolidate loans, they'll have to use a traditional Freddie Mac refinance for that. Okay, and also this is for a 1-unit primary residence only. Our area median income is up to 100%, and at least one borrower has to be occupying the primary residence. Also, another qualifying factor is the mortgage being refinanced has to be reduced by 50 basis points. And what that means, if your customer has a 4.5% rate, it has to be 4% or below, okay? And then the maximum loan to value is 97%. And this is very aggressive right here. The maximum debt to income ratio is 65%. And again, we're helping existing Freddie Mac customers here. And that's why you see that debt to income ratio being higher than normal. Okay, if you're going to refinance, a Fannie Mae customer or a government insured customer, then our automated underwriting system, loan product advisor, will be doing those calculations. And more than likely, on those type of traditional refinance products, the DTI is 50% or below. And also the credit score minimum is 620. And we also have an advantage here for existing Freddie Mac customers. They'll get a $500 credit if the appraisal is required, and Freddie Mac will reimburse that. So from an existing mortgage payment standpoint, they can't have any missed payments in the last 6 months. So that's 6 payments in a row. And then we're going to do a 12-month look back, and they can only have one delinquent payment in that 12-month look back. And please advance the slide. So again, great opportunity for you to, call your, former customers, let them know about this. They can take advantage of, a great refinance opportunity if, they have a Freddie Mac loan. Like I mentioned earlier, might be a great opportunity for you to get referral business from this. So, the whole, concept of the Refi Possible loan is, to help that Freddie Mac customer, attain a lower interest rate, a lower mortgage payment, and that way it will give them a cushion against any future financial hardship by realizing that they have a lower payment, and hopefully give them more disposable income and cash in hand. And please advance a slide. And this is a nice tool here, which we've dropped into the chat box here. This will allow you to see if the what the income and property value limits are for a particular address. So I encourage you to copy and paste that link that we put into the chat. It's very, very easy to use. Just put the address in there, and it will give you all the pertinent information for the area median income. And if you have any issues using that tool, please let Monica or I know. And next slide. And with that, I'd like to thank you. This has been a great opportunity to talk to everybody virtually. Hopefully one of these days we'll be able to visit you in person. It looks like things are getting better out there, and I would love to get down to North Carolina and meet all you folks down there, and have a live event. So right now, ask Monica to come back on. If we have any questions, we can.
Absolutely. Here's your chance now. If you guys have any questions, please feel free to ask us. We are a resource to you. I know Jim mentioned that if you would like to use Refi Possible, your loan would have to be owned by Freddie Mac at this point. And we do have a Freddie Mac loan lookup tool as well. So that's a resource that you can see. I mean, it provide to your clients. And really what we want to do with this session is really, make you guys rethink of your opportunities to continue to build your client, be the trusted advisor, share our news and insights on your social media pages. That way you are, reminding your followers that you're the go-to, because you never know when your next opportunity, who could be looking, and what their home ownership needs are going to be. So we're going to give it a few more minutes, see if there's any other questions coming through the chat. If not, we'll go ahead and say goodbye, and we'll see you on the next one.
Yeah, and I also like to mention that we did drop a link for our Credit Smart financial education tool into the chat. This is a great tool for consumers to use. It's done online. It's multiple modules. It's self-paced. It doesn't cost anything. So, please take a look at that also, and share that with your consumer base. I think they'll find a lot of value in it.
Absolutely. Well, if you don't have any questions, I really appreciate you guys joining us today. Have a great week.
All right. Bye, everyone.